I noticed the overnight traders didn't do a lot, right? Price action didn't present much opportunity. So we'll see what we get this morning here coming up in just a few minutes using the standard HVWT system and approach, which is designed to capture pent-up order flow that comes into the market right out of the gate. Let's cover the rules for that in case you're newer to the approach, and it's always a good reminder. So let's just go over the rules really quickly. In a moment from now, at 9:30, a blue vertical line will plot on your chart. Once that line plots, we're looking for a very simple setup. We use our trader intent indicator to match the bar color. We need 3 of those matches in sequence, and that becomes our setup. They do not have to be in a row, by the way. This example shows them in a row, but sometimes they're not. When you get a setup, the calculator will plot a plus sign indicating your entry, showing you a yellow dot on that trade setup as your money management. And on the fixed position, the ultimate target is represented by the blue dot. Risk on both your fixed and big wave positions is represented by the square. Speaking of the big wave position, once we get to the fixed target, we kick in our trail stop, which is represented by the white dots above here, in this case, the move to the downside. And the second position, the big wave position, it's the meat of this system, so to speak. It is designed to capture as much of a move as possible. We never know how much that's going to be. Okay, when we get into a trade, we want to put ourselves in that position to capture the move. Also, as I always like to say, when we get to that fixed target on the fixed position, as traders, that is just a psychological boost and a benefit to the big wave position. We know we've got some profit out of the trade. We can let that second position capture as much of the move as possible. It's never going to be the entire move, understand that. But anyway, so that's what the trail dots are there. This is what we call our active setup. It's our active window that we trade at 9:30. We have other active windows. If you're newer, we'll do the same thing at 9:45 and 10 o'clock. Pop and pivot at 9:30, especially the 9:30 start, is a very real possibility. If you're newer to the approach, that can be one of the most challenging things to walk through and understand and know what to do. But here's the basics of it. When that price explodes in a direction, it's going to be faster than you can execute. And your goal as a trader is not to react. It is to simply watch that price action, right? It popped up and came back. You don't want to jump on board this move is the point that I'm making. What you're going to do in this case is you're going to put a buy stop above that hesitation. You want price to come back and prove you should be in the trade that's set up for you. If it doesn't, if it rolls over before triggering in your buy stop, then you have what is called the virtual stop out. Now, that's great. We just missed a losing trade in that situation. And depending on the situation, we'll most likely step aside and see if price picks up and there's ways to get out of the what we would call the chop zone. Now, if price comes up and triggers you in, then you manage the trade per the setup as you would normally manage the trade. So those are the two possibilities. And then the other option you have as a trader is to step aside for the first minute. Wait, do a 1 minute delay. That's going to avoid 95% of that pop and pivot possibility. So I'll cover both of those sequences this morning at the start. And so let's get over to the Russell chart. This is the overnight price action going back to 2 a.m. Very tight sideways price action here. You can see the session high and the session low on the chart. Okay, and it's just bouncing back and forth in this channel. So we definitely want to pay attention to the session high and session low in this case as pivot points. This bar type does a really good job of showing you what I call problem areas. I use this all the time when I'm trading late morning, in the afternoon, and especially if price action is slow, pivots are important. So we'll do the same here this morning. We'll pay attention to them. Once a pivot is broken, then it's done, right? You throw it away, you throw it in the trash, and you look for other areas on the chart that kind of stick out. All right, we are a minute, a little over out. Again, we'll be looking for our first setup. We can take up to 2 of these active setups in the 5-minute window that we call active mode. After that, we'll transition to trend mode, and most likely you'll hear me talk about TrendRider. That is my favorite way to trade right now. So we'll most likely talk about that. I have the trade assist running over here in TrendRider, ready to take off trades and start trading right at 9:30. All right, 3, 2, 1. We are open for business to the upside, and you should be on board that move to the upside. It is popping to the upside hard. Hard. There was no pivot to work around. Well, there was this pivot right here. But as this price action pops to the upside, you should be on board that trade. Nice move out of the gate. This is what we dream of as traders. through your fixed target, now trailing the big weight position, 24.41. Doesn't really get any better than that. That's a pretty easy move to get on board. Yes, you're going to have some slippage, but you get on board the trade when you see the train leaving the station. Trail stop has leveled off here, 24.41.8. This trade's going to be a win. We just don't know how far this trailing move is going to go. Banging into that session high. Remember what I talked about here? To the session high and rejecting back. Then the full trail's out there. All right, and we are selling off. Second active setup, 931 traders. This would be your trade coming at the 9:31 and 10-second mark. Trade number 1 in the books for POQ1. And if you're brand new, we recommend that you do follow POQ1. Be done on the day. You've got your win. If you're looking for a second trade, like I mentioned, this is your second active trade setup, and or this is the 931 trade. That stop is parked just above the session high. I would consider moving that up a little bit higher than the session high. It's right up like a tick or two above it. And like I said, that's the second active setup from the 930 start. It would be the 931 trade, taking a little bit of heat right now. And at this point, still staying in this zone that we've had overnight. Price really didn't break out, obviously, to the upside here on our first trade. On the short, looking to get to money management, 2439.6. All right, short trade, nicely through target, now trailing that trade. And we're going to bang into that session low. Same thing that happened up here. Most likely, a bounce off that session low will entail. Trail stop currently 24.41.1 on the short. Hopefully 931 traders, you got on board that move right there. It took some heat. Never fun to take heat, right? Fixed target. And currently we've gone 47 ticks from the setup. That's enough to start to think about reducing the big wave risk if you want to use that method and approach. What do I mean by that? Is basically you cut it in half. Once you get to the 40 tick mark, you can cut it in half, roughly in this area, maybe a little more, and you would be out at this point if you do that. Now, if you use the full trail, we are still in this trade. Barely missed by a couple ticks here. If it plots a down bar, we have earned the right to move off of that pivot. Not until then. Until then, the stop stays right here on the trail, 24.40.7. And a punch into the session low here for those that traded the 931, and you're using the full trail. Now 67 ticks in our favor, 68. Nice trade. That's the trade of the opening session here. By the way, we only trade 2 active setups, up to 2 active setups. POQ1 traders, as I mentioned, if you're 930 start, you're done. If you're a POQ2 trader at 930, then you get this opportunity, this short right here. If you're a 931 trader, this is your trade. 75 ticks, breaking down that session low. Now, the other option you have is actually adding to the trail stop. We don't talk about that very often, but when a trade goes 40 ticks in your favor, you can start to add 10% of the overall move to the trailing stop. So if you want to do that, give it more room to breathe, that's something you can also incorporate into the mix. Let me know in the chat if you took either one of those and how you did, how you managed it. All right. Price flirts with our trail stop here, 2438.2, got within a tick, and we have a down bar. So you've earned the right to move off of that stop. So when price pivots in front of your stop like this, and a pivot is set, in this case, once it comes up and then a opposing bar is plotted, a red bar here, then you've earned the right to move it up. Now it's going to get taken out here, but all I'm saying, you've earned that if you want to move off that area. I would make that move every time. I would make that move back here. Back here, it never challenged it. Here, it did come up and take it out. Okay. The other thing that I can say that I would probably do in this case, probably on this first pass, I would probably most likely be out of this trade, approaching the session low, because that would just be on my radar. And then secondarily, if you're still in on this pass into the low, it punched in pretty good. I would also be looking to exit right in through here. Personally, don't trade. Let's review TrendRider rules really quick. The first and prime directive of TrendRider is asking this question: is price moving? And really, honestly, any system that you trade, as traders, we want movement. The first and foremost question that you've got to ask yourself is price moving? This is the kind of price action you want to see, what I call the lightning bolt pattern. Impulse move, pullback, impulse move, pullback, impulse move, pullback. As long as you continue to see impulse moves that are high quality, you can continue taking trades in the direction. All right, let's go over the very specific rules for TrendRider. We need a 15-bar move in a direction to set the trend, right? That's what this impulse move does right here. After that, we need a pullback. The more shallow that pullback, the better. Because if it's a shallow pullback and then it follows through, the setup is going to be the pivot that was set by the impulse move. That, for me, is an A+ setup. I'll take that trade every time, with the exception. When would I not take this trade? If it's going to bang up against a pivot point or a session high or a session low, that's where I will most likely pull off. But when there's no areas to be concerned about, you get the impulse move, shallow pullback, follow through. And if this happens all very quickly, that's the best and sweetest price action to trade. And as I love sell-offs, they are so easy. And so anyways, that's the sequence you're looking for after the pullback, looking for that 3-trade intense sequence. On the first 2 trades, you use the normal risk profile of the bar size that you're trading. We use a 40-tick trail. Normally it would be 60 ticks on the 12 WT bar size. So that's noted right here. So on the first 2 trades in the direction, you use the full risk. On trades 3 and above, I would always be highly suspicious of consolidation and sideways price action. I can't tell you, that's going to happen more often than it will continue in a direction. After trades 1 and 2, more often than not, it will move sideways. You're better off to be a POQ1 or a POQ2 trader with TrendRider and not get involved in that sideways choppy price action. It will frustrate the heck out of you as a new trader. Okay, so that's that rule. Best windows to trade. Basically, you have the opportunity to trade 23 hours a day if you have the time and don't need sleep. And some of the there's a few guys that do that. It's crazy. Here are the sweet spots. London 3 a.m., U.S. pre-market 7 a.m. You've got to stay away from 8:30 news. And the U.S. Open 9:30 to 11:30. And then the afternoon session 12:50 and 1:50 are good start times. Be careful at 3 o'clock if you're going to trade. That's when the markets does tend to stop trending. People start to square up their positions. You can get yanked back and forth in a non-trending way. Typically, the trend is done by that point. If I trade 3 o'clock, if I'm looking to still take trades, a lot of times what I will trade at 3 o'clock on is more of an active approach. I won't get into it here, but that is something that I will look at. If you're watching the price action, you can see it pump in a direction. And so I do a lot of times take a more active approach to that. So that's pretty much TrendRider at its core. And like I've mentioned, it's my favorite way to trade right now. We don't get home run days every day. Some days we get singles, some days doubles, sometimes triples. Sometimes you strike out. So there's that mix in trading. It just is a part of it. With that, have a good day, everybody. And we'll come back tomorrow and do this all again. We'll see you then.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPick's full risk disclaimer and privacy policy.